This webinar is recorded and made available in an accessible alternative format upon request. If you require captioning, transcription, or other communication services to access this webinar, please contact Disability Resource Center at drc@snhu.edu or 877-591-4723. Select option 4. The purpose of this video is to show you how the MyLab assignments relate to the final project that's due for our ACC 201 course. Let's take a look at the last problem you did for your Module 1 MyLab homework. This is a sample from problem 4. The numbers change for each person, so don't be alarmed if the numbers in your homework don't match what you see here. This problem had several requirements, from journalizing transactions through the preparation of financial statements. These are similar to the requirements in the project. In this problem, you're given transactions for the month of December. In the first part of the problem, you created journal entries from these transactions. Your journal entry page looked something like this. Now let's go to the final project files and see how what you did in the MyLab problem is similar to what you'll do in the final project. Take a look at the files titled Accounting Cycle Workbook Instructions and Accounting Cycle Workbook. When you open the instruction file, you're given an overview of the project. On the next page, you're given transactions for the month of July. Note that these transactions are similar to the transactions you were given in your MyLab assignment. Next, open the workbook file. On the July tab, you'll see a page on which to do your journal entries. These will be similar to the journal entries you did in the MyLab project. So let's open the workbook and use it to complete the MyLab problem. We'll put the transaction details next to the journal entry ledger. Let's take a look at the first two transactions on December 2nd. In our first one, stockholders contributed $25,000 in exchange for common stock. Just as we did in the MyLab, we debit cash because we're getting cash into the company, and we credit common stock because we issued common stock. On 12/2, rent was paid for $450. We debit rent expense to increase the expense account and credit cash to record the decrease in cash. Now, note what you did in MyLab on the right and how those same journal entries look in Excel on the left. See, you may not have used Excel when you did your MyLab work, but you did the exact same journal entries. Now we'll record our 12/3 and 12/4 transactions. On 12/3, we pay cash to buy a computer. The problem tells us the computer is equipment, so we debit equipment for $2,100 and credit cash for $2,100. Here we're increasing equipment, which is why we debit, and we're decreasing cash, which is why we credit. On 12/4, we purchased office furniture on account. You remember that on account means we did not pay cash, we charged it. So our entry is a debit to the office furniture account and a credit to accounts payable. Accounts payable is a liability account, and we credit liability accounts to increase them. Let's look at the next three transactions. On 12/5, we purchase office supplies on account for $800. We increase our office supplies asset account by recording a debit. Because we purchased on account, we've incurred another liability, so we increase accounts payable by $800. On 12/9, we perform consulting services for a client on account. We've earned the revenue because we performed the consulting, so we increase our revenues by crediting the account for $1,800. Our client hasn't paid us yet, so we increase accounts receivable through a debit for $1,800. On 12/12, we pay utility expenses for $340. We debit the utility expense account and credit cash because we're reducing our cash account. On 12/18, we performed services for a client and received cash of $3,300. We debit cash and credit service revenue because we want to increase each account. On 12/21, we received cash of $1,600 in advance of services. This means we received cash before we earned the revenue. Our entries are a debit to cash of $1,600 and a credit to unearned revenue of $1,600. Remember that unearned revenue is a liability. We owe a service to our client. To increase a liability, we credit the account. Finally, on 12/21, we hire an administrative assistant. Even though the problem tells us when the employee will be paid and how much the employee will be paid, the employee has not worked yet, so no payroll liability has been incurred. On the day we hire the employee, we have no entry. Now let's finish our December transactions. On 12/26, we paid $300 on account. Remember back on the 4th and the 5th when we purchased furniture and supplies on account? Now we're paying some of that. We debit accounts payable to reduce that account and credit cash to reduce cash. On 12/28, we collect $200 on account. This is from our transaction on the 9th when we performed services, but the client didn't pay us then. Now we're collecting $200 of that receivable. We debit cash to record the cash received, and we credit accounts receivable to decrease the receivable account. On 12/30, dividends were paid to stockholders. We debit the dividends account and credit the cash account to reflect the reduction in cash. We're at the end of requirement 1, journalizing the transactions. This is a good time to review some very important rules. Each transaction must have a debit and a credit. The debits and credits must balance. For example, if we have $300 in debits, we must have $300 in credits. Think about the accounts we're increasing and decreasing and whether we use a debit or a credit to increase an account. Exhibit 2-5 on page 72 of the text will help you remember when to debit an account and when to credit. Come back for our next video where we take our journal entries and transfer them to T accounts, prepare our trial balance, and financial statements. Thank you for watching this video.